you so much, Sebastian. Miro, appreciate it. Yat, how you doing, sir? Finit, appreciate it. Come again? It's also because of you, my friend. Thank you. How's everyone doing? Oh, shit, we got the mayor from Dubai here. That's fantastic. They let you in the country. We like that. What was the most controversial thing you guys heard on this panel? Anyone? There was nothing, or you heard it all before? Is that what it is? Now, our next panel, I'm going to call out 5 guys in a minute. Former Playboy models turned VC. And they'll be talking about exploring investment strategies for success in Web3. Now, it's a mouthful. I have no idea what that means. I guess how to find the best investments early. And if not, you ask Smiet. He's an expert at that. Good to see you, sir. How have you been? Rested? That's what I'm talking about. Now, let's see. As we wait for the guys to get mic'd up, Raj, how's Raj doing? Is Raj ready for this? Backstage, I was asking these guys, what's your most controversial opinion in crypto? Right? And it all boils down to, if your blockchain needs an L2, it probably shouldn't be a blockchain. Right? And then second one, everything after Bitcoin is a meme coin. Everything below, right? I see one person here says, okay. Now let's do a quick survey. Everything below Bitcoin is a meme coin. Only 3 people agree, 4. Who disagrees? Thumbs up, thumbs down. Oh shit, everyone defending their L1, L2, L3. What's your favorite, sir? Algorand, Tesos, Phantom. See, the bingo already started. Throw it out. Could be anything, right? Now, Raj, let's call him out. Raj, are you ready, sir? Next up, we're going to have Leeor from Spartan Group, Swiss banker, based in Zurich. Then we're going to have Nuelle. He's the GP at Galaxy Ventures. Julien, actually a local. I think it's the only local in the group, from Stake Capital. And then lastly, Marc from Mechanism. Marc is my longest crypto friend. I think I met Marc in San Francisco late 16, and he's still here, right? It's good to see, and I told you this earlier, it is possible to make long-lasting friends, relationship in the industry. No matter how many times you're going to get burned, right? It is possible to meet great people, right? You go to Dubai, ask this guy here up front with a beautiful smile, and he's the Rolodex in Dubai. He knows everybody, right? So when on my way to Dubai, I'll start texting him. Faraj, can we meet? Great people to know. Literally, great people to know. And he'll tell you, like, don't go there, right? True or false? See, I'm his CMO, right? Do his marketing. Now, let me check up on the speakers. It cannot be they take that long to get a mic set up, no? Paulo, nice to see you, man. Doing all right? Good to see you. This your first proof of talk? Loving it. Now, here we are, guys.
Superhero.
So now, on my far left, I told you guys I bought 5 Playboy models. And these guys, basically, the whole panel translated, these guys know how to make money in crypto. All right, so ask away. Cheers.
Nice.
All right, guys, so I'll get us started. Maybe with a brief introduction from each and every one of you.
Hi, everyone. Oh, very sensitive microphone. Hi, everyone. My name's Leeor Groen. I'm a managing director at Spartan Group. Spartan Group was founded in Asia by 3 former Goldman partners with the vision of creating a platform for the industry to invest, advise, and work with the best entrepreneurs in Web3. Today we run asset management and investment banking business where we have about $500 million under management across a liquid hedge fund and 2 venture funds, one focused on gaming and one focused on DeFi. So as close to the tech as possible and working with the best entrepreneurs in this space globally. Great to be here with you all.
Hey there. I'm Will Nelly. I co-lead Galaxy's venture investing efforts. Galaxy, for those who don't know, is a large financial services firm in the industry. We're operating across mining, asset management, and trading. I handle and co-lead the early stage investments in our, in the ecosystem. That's DeFi, CeFi, stablecoins, payments, infrastructure, and much more. Happy to be here with you guys today.
Hi guys, my name is Julien Bouteloup. I'm the founder and CEO of Spartan Group. We've been in the space for more than a decade. Been investing in more than 200 different projects in the space. We also have a venture studio, so we've been building different DeFi projects. So we also get involved in staking, liquidity provision, market maker, spot, derivative. Yeah, that's it.
Marc Weinstein, I'm a partner in Mechanism Capital. We're a prop fund in the crypto space. We primarily do venture investing. Early stage got our start in DeFi, but we invest across gaming, infrastructure, DeFi, now actually the AI segment as well. And we also have a liquid fund that we manage that invests in projects that have already launched a token.
Awesome, guys. So jumping right into today's questions, I'll start with Marc. So Marc, between RWAs, DePIN, decentralized AI, and other narratives, what do you believe will be the main trend, or will be the main trends this cycle?
I think, well, it depends on when you think this cycle is going to end. I think currently, for a venture cycle, we're already looking probably 3 years out for the next trends to kind of take shape. I think right now the narrative in the public markets are RWAs, as you mentioned, DePIN, decentralized AI. I think one that you didn't mention is the build on Bitcoin narrative, which we're super excited about. And with BitVM rolling out probably within the next 2 years, I think we'll finally see some trustless L2s on top of Bitcoin, whereas everything right now is really more of like a side chain. So excited about that innovation because it's going to be able to bring the liquidity and security of, in my opinion, still the most exciting asset in the entire crypto space, the OG Bitcoin, to kind of like more fully functional rollups.
Go in any order you'd feel. I mean,
I'll weigh in here. I think idea is to have a bit of a debate. So I still think, from our perspective, coming with an Asia lens into most of the things you do. I'm based in Switzerland, but our organization is predominantly Asia-based. We are seeing a lot of things in gaming, which I think is a blanket kind of concept that we talk about. But what's really interesting is when you see the user penetration rates and the engagement in this sector from retail bases as a percentage of populations. Countries like Korea and Japan have always been at the forefront of crypto adoption. And specifically what makes those countries unique are also the level of engagement that they have in gaming as a concept and how much they love to engage in this space. So really for us, what we've been working on, again, to your point, what is the cycle here? It's really more than just a 12, 18-month window, but what does the next 3 to 5 years look like from engagement perspective? We do see a lot of the crossover between classic Web2 studios, gaming studios, developing and building in this space, enabled through crypto economies. And I think we had a proof of concept, let's call it, with what happened with the NFT booms and the kind of crypto culture that came with. And now bringing that into what people actually love to do, which is to game. We're seeing mass user bases in Asia who are actually directly getting engaged and involved in this. And it's not just at the Axie Infinity level of let's come here to make some money together. It's really this is the better way to do things, so why would I not have Web3 enablement within the way I'm producing and creating not just AAA games, but all levels of gaming over the next year. So that's something that we're very excited about, focused on, and continuing to double down on across this cycle.
Well, within gaming, I think the incorporation of tokens and blockchain has created a larger network effect and stimulated in-game economies way more. right? I mean, if you remember Fortnite, a bunch of people put in a bunch of dead cost within Fortnite. Today you have all these assets, which could be limited edition and valuable to others, but you don't really have a way to transfer them over, right? So Web3 gaming has changed that to a large extent.
Well, gaming is it's an interesting industry because probably one of the most viable industry in the world in terms of injection of capital. And the reason why you have silicon conductors and all different AI is because of the gaming industry being able to inject trillions of US dollars inside the market. But it's also a very complex industry. For example, we built the largest asset manager in the gaming industry called Blackpool, and we were the biggest manager on Sorare. Sorare was the football fantasy game. The only issue in the gaming industry is big AAA studios that are able to deliver AAA games. They don't really care about blockchain because they can make a lot of money. So the problem with gaming, if you want to bring blockchain inside, and we've been there for almost 5 years, injecting capital, we invest in Illuvium, in many different games. It's only small studio can or are incentivized to build with blockchain because big studios, they don't really care. They already make a lot of money, and they actually don't want to bridge asset between those games because they want to keep their market shares. For example, FIFA or those type of games, they don't want people to outside, or Fortnite. They want to keep it inside, and they don't want people to share. So you only need to get into small studios, but those small studios, the life expectancy is very small because it's quite tough to build games. So it's a tough market. The first one that can actually manage to build a game that is fully cross layers and cross chains, that could be a massive valuation. Yeah.
I'm actually interested in proposing a counter narrative to the gaming thing. Like not that gaming is a worthless endeavor in the blockchain and crypto space, but we pay a lot of attention to the size of the markets of the things that blockchain could disrupt or intermediate. And gaming, I think, on an annual revenue basis, don't quote me on the exact figures because I haven't looked in quite a while, but something like $100 to $300 billion of annual revenue across the world for the gaming industry. Financial services are $6.5 trillion per year in gross profit, right? Not even gross revenue. So the size of the market, when you're looking at like what blockchains can actually impact, is so much larger in financial services. So we as Galaxy spend like all of our time thinking about how blockchains can impact financial services, bringing assets on chain. I think pragmatically, the RWA stuff is interesting, but we need a lot of regulatory advancements probably to get there. We're seeing a ton of real just secular demand and growth for payments and stablecoins, using stablecoins not from crypto companies, just abstracted away, to move money across borders primarily. That's primarily for B2B businesses, or for sort of B2B offerings rather than C2C right now. And we think that's just part of the longer trend. So, I actually appreciate what you guys are saying about gaming, that there's a market there, but
I mean, I said it was a market, but it was a tough market. So it's a counter argument.
Yeah, no, just that maybe as bringing in a different side of the discussion, the financial services.
Is Leeor all by himself defending the point?
I'm going to do it, guys. I'm going to do this. So, of course, recognize the depth and clarity there, which is financial services is a much larger market than gaming in terms of absolute value creation or a dollar value that we assign to it. Reality is, though, and especially from my perspective, I can say what drew me to this industry initially is how do you provide financial services for not the 1 billion people living between Western Europe and North America, but how do you get the rest of the world's 6 billion population onto financial market infrastructure and rails? And again, here, that's not a incremental dollar value that makes it relevant and interesting. It's a user-based number. It's a number of people. It's a decentralized movement and community. That's what crypto and blockchain's all about. And the best application of that is not the dollar value that's derived from it, it's the number of users and engagement that you have, which is why I think when you look at the development that we have, especially in Asia, which is why I think it's so exciting for us to be on that cusp, in the Asian markets, a lot of developing economies, all of the people in these markets are digital natives. Now, the opportunity set is that over the next 20, 30, 40 years, they will all be crypto native people as well. Now, within that construct, what does crypto native mean if your free time is spent in games as a core part of your lifestyle and how you spend your free time for a vast majority of a population? That represents an opportunity set which is unparalleled in the ways that we think of traditional tech investing in winner-takes-most markets, because I don't believe that's the case here. And just to round out the point on the gaming shoes, I agree, it's incredibly hard, and frankly speaking, we have not seen this play out as fast as we wanted, as well as we wanted, and someone who's been following it for many years, I'd like to say we have much more successes, but we don't, so acknowledging that. I would just add and say, though, the idea that these smaller gaming studios are the only ones engaging with it, or are the prime ones to engage with it, is not really correct, because if you look at, again, to the point on how are gaming studios and developers actually done today, I mean, outside of the American institutions who are dominating and creating things like EA Sports and FIFA, everyone else is creating games for localized markets. And I really think that the Web3 opportunity set is how does the second, third, fourth largest gaming studio in Korea, Japan, Taiwan go out and compete and acquire a global market share? Because today, most of us, we're not even looking at the same games that these guys are talking about. And I think a lot of these gaming studios, it's not that they're not resourced. Of course they want to compete. They want to go out and bring on more users and make more money. That's the corporate ethos and the way business is done. But the opportunity to do that is today constrained by their ability to actually go out and compete globally. And I do see the Web3 enabling layer as a way for them to actually access global audiences and global markets. And that's where we're really focusing at the moment, and seeing that transition over to help these players actually go out and compete and offer things globally.
And just to offer some support to Leeor as well, like there's few use cases in crypto from a daily active user count that can match what some of these games have. Like a game like Pixels, which now has amassed over 2 million daily actives, right? Like we don't see that in other areas of the industry. And because really like crypto in a way is financializing gaming, it's almost the convergence of those two markets, right? Like creating activities and gamifying kind of financial services for the other 6 billion, in the world beyond the West. So, cool.
So, drawing some sort of a takeaway here is, even if gaming is not making a large financial impact, it can act as a big distribution channel to onboard of Web3 users to access Web3 utilities, right? So from jumping there, maybe we can talk a bit about real-world assets, not just securities and tangible assets, but also real-world use cases, bridging Web2 liquidity into Web3.
So I think real-world assets, I've been doing this for a few years, and like originally real RWAs or real-world assets were called security tokens.
Yeah.
Right. Like it's rebrand. It's like chain abstraction was intense, and it was cross-chain, whatever you want to call it. Like we always have a new phrase for things, a new acronym in the crypto space. Security tokens / RWAs are interesting from the standpoint of improving efficiency for financial transfers of assets like debt securities, which still today in the TradFi world can take weeks to actually close. These efficiency gains, I think, will be captured predominantly by existing financial institutions. So as a venture investor, I have a hard time finding opportunities in the RWA space that I think are going to reach like the TAM, for example, that Will was saying is necessary to make a venture capital investment. The other challenge to RWAs that I see is like on-chain capital is really like a fraction of global capital markets. And most of the investors that are interested in generating, a 7% IRR on some kind of, real estate investment are able to access those investments already. So they don't need to come on-chain. And on-chain capital is looking for more kind of degen opportunities, or they can move that capital off-chain eventually. Those that are not willing to or able to move that capital off-chain, we might ask, why? Yeah. And so I don't find the market for, for on-chain assets to be that large. Ondo Finance, I think, is like a core example of something that has product market fit today. I think they reached 400 million in TVL recently, because Treasury started paying a high percentage yield. It's like 5% right now. So there was some demand, but I just don't know that it's necessarily like venture scale. even though I guess Ondo is trading at what, like 4 billion FDV, 6 billion FDV. I don't, you probably missed it in the seed round. So anyways, yeah, that's my take on RWAs for now.
I would agree with a bunch of the points. There's the question of, how much can a sort of startup make a difference in a market dominated by incumbents, especially when you're dealing with off-chain assets, which sort of require fundamentally that you're dealing with the off-chain legal contract, right? If you're talking about a security off-chain, it's a legal contract, and some intermediary has to come in and bridge that to an on-chain environment. And that's going to be held, in the U.S. by the DTCC or something for actual stocks and so on. That said, when you look at the payments opportunity, so one of the things that we're practically seeing on the ground is companies using, non-crypto corporates using crypto behind the scenes, stablecoins in particular, to move money from US to, let's say, Singapore. And instead of doing that over SWIFT, you're doing that, with, you use a market maker, go out to stablecoins, go across the world, and then from stablecoins to Singaporean dollar. The interesting thing about that is banks actually, like traditional financial institutions, they can't really touch crypto generally across the world, especially in the US. So they've kind of handicapped themselves at the knees in some ways. And so there is actually this market opportunity there for some crypto native players to come in and provide that liquidity and provide that rail. And that's
can I just like qualify my RWA answer?
Yeah.
RWA's X stablecoins.
Fair enough.
Maybe
fair
that's
enough.
not fair, but
No,
I think
totally
of stablecoins as their own separate.
Yeah. No, I think it's probably generally true for like tokenized assets, and I would definitely agree there. We'll see how it plays out. Yeah, I mean, and we see the sophistication of BlackRock, J.P. Morgan, et cetera, who are already in, and they're already, innovating and.
Yeah, and I think BlackRock, for example, will enter this RWA space, but as a venture investor, it's I can't capture the upside of their participation easily unless they're acquiring some tech provider.
I think it's the same. It's the same discussion as gaming. I like your point. Technology is so good. It's amazing. It's been there for years, but still, no one is using it. And the big players, Ubisoft. They tried on Tezos, didn't work out. The problem is like when you have the market, control of the market, you don't fucking care. You just want the things to not change. You prefer keeping the market and operate and make a lot of money. And in the real world asset, if you cannot make under-collateralized loan or you cannot leverage your liquidity, the fuck you care about blockchain? You don't care. You don't want to go inside. So as long as you have the market, yeah, of course, BlackRock, to keep more shares or whatever, they're probably going to enter the market and going to deposit inside, backed finance, we are investors, centrifuge, Ondo, whatever. But as long as you cannot do like under-collateralized loan, provide 100K and get 10 million, what the fuck you want to play with this shit? No one wants to play. So the problem is like incentives. As long as you don't have the correct incentive for the big players to enter and play with those games and tools, they shouldn't play with those tools because they control the market. And that's exactly what's happening in the gaming industry. Big studio, they don't want to play with this because they have the control of the market. Yeah. As soon as you have a small studio that take 10%, 20% of the market, then they will start realizing that it's a big opportunity, they can make more money. But for now, investing in research, controlling solidity development, smart contract, it's a waste of time. And they shouldn't. Unless you have a big guy, a small guy that becomes big and then control the market. It's the same with real world assets. The same. So if you have centrifuge, back finance, Ondo, suddenly having 500 billions, a trillion, controlling some markets, then they will say, oh shit, we really have to enter. Then we can produce under-collateralized loan, leverage, and that's why I believe that the market is moving into structured products. This will be the biggest market in the DeFi space because it's already the biggest market in traditional finance. And now it's happening. You can actually do options, future, perps, bonds, ETF, all different things at the speed of, not light, but the blocks. But you can mint those options at cheap cost, super fast. That's the reason we always say, oh, the technology is so good. But we never ask ourselves, if it's so good for 10 years, why no one is using it? Only us, less than 1% of the worldwide society. It's bullshit. So, yes, it's good. It's helpful for us, like as a echo chamber, but why is those guys not using it? It's not because it's so good as a technology, it's because they have no incentive to use it. That's my mind.
Well, to some
Not
deg-
yet, you know, until like we have two trillions on blockchain. Like,
Yeah.
if we go like up,
2.5.
yes.
And
BlackRock is coming. Yeah, this will change the game. That's for
that's
sure.
the opportunity, though, right? Which I think is what is important for us as venture investors from this perspective now is to actually take that opportunity to build these things, which can either be the new dominant like paradigm of the way things are done, or you've at least achieved a critical mass so that when the other boys, bigger boys, do come and compete, you're already at a size where you can remain relevant. And I think, I mean, now we're going a little bit off topic, but one of the examples I like to give here is actually Safe, right? Gnosis Safe. So these guys, I mean, they've built a effectively, you know, ability to store and secure $100 billion of assets. Outside of the US, if you look at most banks, I mean, even here in France, most banks, tier one banks, don't have more than $100 billion of assets, right? So I think we need to like sometimes just take a step back and recognize what is being like actually happening in this ecosystem. I agree it's an echo chamber, so I appreciate you saying it so directly. But there are things that are moving, and that development work happens as a function of the absence of TradFi coming in and being like, guys, this is how we do it now. No, it's very much been left to early Ethereum entrepreneurs who have left that project to go now focus on initially Gnosis, spun out of Gnosis to now build Safe, and Safe has now over $100 billion secured on its network as a core technological layer. Now the question is, what can we do on that? Do we just replicate the existing banking system, or do we actually create new financial services and products and make something which is, you know, more in line with what I had talked about earlier with this idea of what Bitcoin and the ecosystem around crypto is, which is how do you cater not for the 1 billion who have access, but the 6 billion that don't. And your ability to plug in and plug out of a safe, smart account, smart wallet, these types of things, so easily, like with an internet connection, like that for me is incredible revolution of this technology and where we're seeing some of these use cases. I have a million questions on the business models and everything else we talk about, value-added products, et cetera, being competitive against TradFi. But at least we're starting somewhere, and this is something that, again, no one said this would happen overnight. No one said, oh, Bitcoin came, so now we have all of this technological innovation here 10 years, 15 years later. No one promised us that. Like, cloud computing was invented in the 70s. You didn't get Google Drive and Dropbox until the 2000s, right? So just put everything into perspective and recognize that we're on a journey here, and, like, we're all part of that happening right now in front of us.
Putting my optimist venture capital investor hat on and thinking about like the scale of this market, it's an area that I think, as someone that's been in the crypto space for a couple of cycles, it's easy to write off instantly. And that, Raj, you asked about it earlier, but it's Web3 AI. And like, you know, it's like, oh, AI and crypto, they have no overlap. It's just vaporware. You know, we're going to get high valuations because NVIDIA stock is pumping. And I think that that's actually how I felt about the intersection of Web3 and AI when I started looking at it. I was like, all right, like, you know, it's got the imagination TAM. So of course we're going to see some tokens that trade at like 10, 20 billion. And as, you know, someone that is in this game in part, you know, not just for the tech, but also to make money, obviously, I was like, okay, that's interesting. But then as I've gone deeper, I'm like, oh, this to me, like, agentic protocols, like the idea of AIs actually doing things and doing things that generate value and then trading that value with one another, where are they going to do all of this? How are they going to KYC? How are they going to open bank accounts? Like, it's all going to happen on chain. And to me, that expands the market beyond just, you know, whatever, I think it's 7 or 8 billion people in the world to, let's say there's one agent per person in the world. I mean, it's massive. It makes the market so much larger. And I think already, like, you know, if I had to guess the percentage of on-chain transactions that were driven by some kind of algorithm, I would say it's probably already, you know, 50%. Because the smartest players in the space are using, you know, machine learning algorithms to generate activity for themselves, sibling drops, things like this. I'm not that smart to do it. But I think that market's only going to grow. And so that's an area that I'm really focused on right now.
Yeah.
So going back to your earlier point, that structured products are what makes a lot more sense to more traditional guys, such as asset managers and private equity firms. We're seeing right now that they're coming into structured products that are usually yield-bearing, and they might be restructuring their credit funds, et cetera, but they are trying to crack through because they see money to be made, right? With all of that liquidity coming into Web3 over the next 5 years, where do you see innovation going within DeFi?
I actually like the point on structured products a lot. I think that's kind of the right place to look when
Yeah.
it comes to DeFi. I think, protocols like Aave, Maker, Compound, Uniswap, and the variants of those on different chains have proven that they're reliable infrastructure. They almost are like a base layer infrastructure in some ways now in DeFi, where Galaxy, we're active in Aave and Compound, which I wouldn't have thought of 3 years ago. We use it for kind of fundamental parts of our business, not just to like get yield on. It's like about inventory.
Farming.
No, it's not just about farming, right? It's about finding inventory for different assets in our business, right? And so I would say my guess is, I mean, you look at I would call it like Athena structured product, which is you put money in a vault and then you run a strategy out of that vault. I think we'll see more of that kind of structure for sure. Maybe another form of structured product is this kind of like Gearbox vault. There's another company called August, and there's some other companies that do something similar, which is use different assets as a collateral to margin up, and then a lender lends into that box.
Yeah.
And it's secure and fully collateralized, and then you can kind of run your strategy out of that box. And that collateral could be the Buidel BlackRock fund, right? You could borrow against the Buidel fund and and do some strategy elsewhere. I think of that as a structured product. So I think a lot of the innovation in DeFi is going to be iterating on this kind of frontier around structured products, margin accounts, different strategies and trading strategies you can run out of like a dollar-backed account, like an Athena. So that's where I would guess it goes, but I'm definitely curious about what other people here think.
I think for the first time, because in this echo chamber, we like to say DeFi is going to replace, or want DeFi to replace traditional finance.
Yeah.
I got a completely different opinion about this. I think we're turning into hybrid finance, where institutions and traditional finance now understanding that they don't necessarily need to go full DeFi, but they can solve some strong problems that they've been facing for 100 years or something. So I think there were some advancing technology that are now available for them to use, because it's not so abstract in terms of like zero knowledge proof or whatever, but you have account abstraction, which is a big one, and secure enclave. So this one in the banking industry, if you can guarantee that user can have full access to the money, but at the same time you can use to a certain threshold in a different manners, this will completely change the way we play with finance. So we'll still play with this. I don't think banking will disappear. I don't think all those big institutions that we have will disappear, and I don't think they should disappear for society. But what will happen, they will start using more and more concept of blockchain, not like degen style, but more to solve intrinsic problem that they've been facing for 100 years, in terms of regulation, in terms of access to capital, in terms of providing yield and providing products to people that couldn't either have access to those products or understand those products. And then this is where AI can come. You can have your own agent that tell you the risk associated with this position, risk to actually rebalance your portfolio, to allocate capital. Maybe you should make a real estate investment, but at the same time, collateralize the position or leverage a position in certain different index. This is we're entering like a phase where you don't necessarily need to know what you're doing, which before was actually a blocker for you to act as a, saying if you don't understand this concept, you cannot invest because it's dangerous, so we block you from having access to this concept, which is completely crazy. But at the same time, can save a lot of people. Like, it's not a casino, it's a plan of DeFi. 99% of people here, they're losing money because they believe DeFi is a casino. So here will be different. You have like agents that are tamper-proof by ZK stamp or whatever, tell you, okay, this agent, whatever it tells you, it's actually for your own benefits, incentives, so you should follow. Not follow, but listen, and then you can take decisions. We're entering a way that people, like a new world where people can have access to tools, but also don't necessarily need to understand in order to actually make a move, which is like completely new. Yeah, they don't need to pay like a big, expensive guy and the banking.
Sorry. We're already there too. I mean, obviously it's going to take time, but there are probably 3 projects. I'm not an investor in any of them, so I'm not shilling my bags, that are working on agents. Maybe soon, maybe TBD, unannounced. One is Giza Protocol, which originally came out doing ZKML, and they built the infrastructure for having off-chain compute brought on-chain using ZKPs. And on top of that, they're building agents. So the first 2 agents that they've built, one of them is an impermanent loss minimization agent for people that want to LP into Uniswap pools and comparable. And the other is a yield optimizing agent. So if I could be like, hey, I have USDC, I want to generate the highest yield with the lowest risk across protocols that have been audited by anyone but CerTic. Like which ones can I put my capital into?
It's actually a good example. Yeah, you can be.
But that's off-chain stuff coming on-chain. That's going to take a little bit of time. The structured products thing. One point that I think
and it's built on top of Zama, FHE.
FHE, yeah. So then you have privacy-preserving smart contracts, and I mean FHE is super interesting. It's slow right now and costly, but it's gonna get better. Local French company as well as Zama.
Those the best.
Respect.
Future of France.
Yeah, the future of France. One question I asked myself on the structured product side, and I'm definitely not a finance whiz like some of the other guys on stage, is what is the risk-free rate of Bitcoin? And I think that the answer is there probably is none right now. Some people put on a carry trade, but that's using futures. Yeah. And so how can we get a risk-free rate for Bitcoin? And I think that, again, like I mentioned this earlier, and maybe it's a boomer thing, but I think that having native permissionless lending for Bitcoin will be a huge unlock for that asset, and then structured products built on top of that in the future. And that is definitely coming in the near term. So for Bitcoin to become global money, I think if it does, right, that expands the market cap of broad crypto to like tens of trillions of dollars. And for Bitcoin to become global money, we need to be able to have leverage on top of Bitcoin in a permissionless way. And I think that's around the corner. So I just wanted to add that to like the CDO structured product comments.
And just to round out the thinking here, because actually for me, how I summarize the opportunity set and what we're really talking about here is similar to the transition we've seen from hardware businesses to software, right? I mean, even if you look at companies like Microsoft over this period, Apple, literally everyone, frankly, and the way in which economics are shared now by global tech companies, people make money on software, value-added services, and that's really the core driver of their business growth and innovation. What's happened in the financial services industry is the banks, let's say the brick-and-mortar bank where you would go and deposit your money, physically pay someone to store it there while they earn interest on your deposits, that has digitized, but that concept is still exactly the same, right. Where it's like, you're giving me, in Switzerland, 1% interest at my UBS account, but you're making like, what percent on mortgages and home loans? Like, what's going on here? How does that make sense? And that provision of services, a bank is a custodian of assets versus the bank is a financial institution that I'm paying for a value-added service, this makes no sense, right? And I think that that's what, to round out what we're saying, it's not that the banks are gonna let us have the crypto fun and they're going to just watch us become big and get disrupted all the way. But what I do think is fundamentally happening is a complete change of the business model of financial institutions. Yeah. And that's what we're really focused on, where we see DeFi, be it RWA, be it any of the early investments we've made across many of the crypto native protocols like Aave we discussed, borrowing lending pools. These things are all a part of that transition where we're saying the fundamental business model of this industry makes conceptually no sense. You couldn't explain it to anyone how it's happening today. There's a technology that has proven its ability to do this on a standalone basis within the Bitcoin peer-to-peer network. And now we're applying that at a scale and proportion which is much larger, much more significant. And obviously with a bit of fun as well, with some gaming in there, to be able to bring something together that literally everyone in the world is going to be doing as their base default
gaming
case.
Guild.
So exactly, Gaming Guild started with this group on the stage here today.
This is actually, you're going into some interesting territory about like the transition to on-chain financial services, particularly when you start thinking about deposits and the purpose of deposits in banks. And I actually don't know how this will play out, and I see it as a bit of a conflict to maybe ruminate on, but the function of putting your money in a bank, which custodies your money, and then they obviously lend it out, and they create money, right? Commercial banks have the effect of creating money by having a double entry, basically two sides of the book. They both an asset and a liability. Then their accounts, their liabilities are keeping it in the bank, which allows them to lever it up multiple times. So you get the creation of credit, right, as they lend out those assets. You don't really have the same in Aave, right, or in Compound. Like every dollar that goes in is like borrowed at some utilization rate, which has the effect of kind of limiting the amount of credit in the system if you ever to move into that. So I have no idea how that's going to play out. I know it will be interesting.
Yeah.
Maybe one conclusion to that would be if you have a bunch of savings assets on chain that are yield bearing, like that are moving at the speed of money, you don't really need to hold dollars ever, and you can just point of sale transact, trade into the recipient's form of savings currency. So if you want to hold an on-chain treasury and they want to hold, you know, private credit fund or vehicle, like Uniswap will allow you to trade into that at point of sale. You don't even really need dollars at that point, right? So I think we're going to get into a weird world here where there's no real corollary with the traditional banking system.
It's a part of de-risking strategies, right? Because right now a lot of structured products rely on the Fed rates. And as the Fed starts cutting those rates, stablecoin structured products will be less incentivized to keep liquidity in there. So how do we de-risk away from that within Web3?
And I actually think that this is, I'm glad that you mentioned that, because I actually think this is the whole point of why I believe that this is a paradigm shift and not just another technological hype. Because the whole ethos around smart contract behavior is code is law, right? And the question is, can you create a better system than the one today by implementing what is literally written in a smart contract or a version of code versus what you're explaining, which is the financial institutions and infrastructure is so mature and so well regulated that people have come up with a way to ensure that what is effectively under-collateralized lending doesn't become a systemic problem for society. So if everyone tried to withdraw their money, we wouldn't be able to because there's not enough money in the bank. But we've created checks and balances to ensure that that doesn't happen. Now that system doesn't make sense. Just objectively, that doesn't make sense. The system that would be the dominant design, the much more secure and trusted version is there's all the money that everyone has is stored and you can do what you want with it in a secured and trusted way, which is what the whole point of smart contracting and code is law as a principle is. And as long as you have access to all of the products that you need to make money on if you're a trader and that's your business model and whatever it is, and that's a more sophisticated and better system than the current version of it today, there's no reason why over time that doesn't get adopted. Dominant design of technology always gets adopted over time. It's just a matter of how long does it take.
I think the take is a little bit more in the middle of perfection and shit show. Like, because saying that lending market is operating like perfectly and beautifully, I think this is not true. They end up in a debt curve the same. I believe it's a paradigm shift, but it's not perfect. And I think the code is perfect. How we've created it is not perfect. Have you seen Rec News? You should check it out. It's some very cool stuff there. The code can be beautiful, but a lot of add-in shit behind the curtains.
That's the process, though,
yeah.
right? I mean,
my point is, whatever we're building, there's, in terms of product-wise, I think this is exactly the same as what we have in traditional finance. There's no, I haven't seen so much innovation in terms of product. In terms of underlying technology, yes, it's fucking brilliant. It's amazing.
I thought you loved flash loans.
Yeah, flash loan was, I mean, of course I did. It was beautiful. But flash loan, if you consider, in traditional finance, it's just someone that comes with a lot of capital, access unlimited capital because of under collateralized loan or whatever, and it can act as a flash loan. And here we gave flash loan opportunities to retail players that with no capital. So yeah, this was actually, in terms of product, that was something really new. We haven't, if you look at traditional finance, they are way more sophisticated in terms of products. What we've built, lending, auto market maker, the automation of market making. Okay, but I think in terms of products, with ZK, zero knowledge proof, those type of things, I think will be the first time that we can actually start creating something that's completely new. Like new, that we haven't seen before.
Yeah, I agree.
For now, like every product that we've been playing with, they're all the same. They're just maybe a little bit faster, distribution is a bit easier. But look, in this space, I still want to use traditional finance, like especially in terms of governance. DAOs, no one is talking about DAOs. They were supposed to revolutionize the world. We wanted the European Commission, the state, parliament to all run on DAOs. Where are they? All gone. It's a chaos. DAOs is not is decentralized autonomous chaos.
So with
So
10
my-
seconds left.
Yeah, my point is like, yes, we're building amazing tech. It's amazing technology,
Yeah.
but there's a lot of chaos. There's a lot of problems, but hopefully it will help society.
Amazing. So I guess we're right out of time. So thank you everyone for joining us, and thank you for a great panel.
Right, buddy?
Thank you.
Thanks, everyone.
Lula. Yeah, for sure. Yeah. Where's Lula? Yeah. I'm calling you. The Playboys are done. Rocket Brothers. Thank you, Will. There you go. All right. That was fun.